In this video, I am going to be showing you how I make money consistently in the forex market even when I am wrong. So many traders think that for you to become profitable in the market, you need to be a wizard in technical analysis. But honestly speaking, I must tell you the truth. Technical analysis doesn't define your success in trading. Rather, what defines your success in trading is money management, risk management, and the right trading psychology. So in this video, I'm going to share with you how I trade profitably even when I am wrong. I've been trading for over 8 years plus, and I've done a lot of extensive research about trading. I've tested different strategy, and to be sincere with you, there is no strategy out there that is 100%. They all have their flaws, they all have their disadvantages. But if you are a struggling trader and you are tired of trying different strategy because you feel it is complicated, then the good news is that I'm going to be sharing with you how I trade without even considering any strategy. In other words, I call it random trading. What you need is a good money management skill. So you are expected to be risking small amount of money. Instead of taking you 100 times to lose, it will take you 200 times to lose. So what I mean is this: you're going to risk 0.5%, not even up to 1% of your trading capital, which means it's going to take you 200 times before you can blow your account. So when you have the mindset that it's going to take you 200 times before you blow your account, you have confidence because you will know that it will take a long losses before you can blow your account. So imagine 200 times. It's going to take time before you can blow your account. So with this mindset, you will be able to trade with confidence. So this strategy is not perfect because you are just trading randomly. But the most important thing there is the money management and the risk management. I want to use this strategy to let you know that being successful in trading or being a successful trader doesn't imply that you must have the best trading strategy before you can become profitable. Because even if you have the best trading strategy, once you don't have the risk management, the money management, and the trading psychology, you are on a long thing. So I'm going to use a simple strategy that anybody can use. It's not technical, it's not too difficult. It's a simple trading strategy that everybody can use. So this is the moving average. So why am I using the moving average? Because the moving average is a trend follower, and as you all know, the trend is your friend. So if you are trading randomly in the direction of the trend, honestly speaking, you are going to be profitable as long as you are maintaining a good risk management and money management. So let me give you a scenario. The market goes like this. Market goes like this. So now when you open your chart and you see something like this, see a movement like this, you know fully well that the market is going up. So you are meant to do or buy. But you can't be able to predict if the up movement will continue because the market is here now. There is absolutely nowhere you can predict that the market will continue going up. because you are not God. You don't know what will happen in future, right? So that is what I'm talking about. So that is why you need to have what? Your edge. Just pick something and focus on it. So now the market can decide to go down and then continue going up. So with this, it means that the uptrend is still in progress. You understand what I'm talking about now? But you never knew if the market will come down, because there is absolutely no way you can be able to predict what will happen. So what you will do is, for the fact that you see that the market is always going up, going up, going up, now this is your edge. Your edge is to just simply draw a line here, then draw another line here, draw a line here, and draw another one here at the lows, right? So now you don't know what will happen. So what you are doing is you're just trading in the direction of the trend, because you have identified that the market is in an uptrend. So now if the market comes back here again, then you take a buy trade, right? You take a buy trade. You take a buy trade. Now there is no guarantee that as you took a buy trade here, the market will respect your trade and go up. There is 50-50 chance that as you took a buy trade here, the market might just go up a little and then collapse down. Do you understand what I'm talking about now? So now with this, now what you should understand is you just trade based on pattern and in the direction of the trend. You don't need any stress or thinking about the best technical analysis. You just trade based on what the market is showing you. So anything that happens, let it happen. Anything that will happen, let it happen. What you know is that you are trading based on what the market is doing. So if the market starts going down, you start trading down. You only trade in the direction of the trend. By so doing, you are going to maximize your profit and minimize your losses, because if you are trading in the direction of the trend, the market will give you more opportunity to make money compared to a trader that is trading against the trend. So with this, I even lose when I'm wrong, because my focus is only to trade pullbacks. So if the market is in an uptrend, I only trade pullbacks. When the market make a retracement, I take a buy trade. And if the market is in a downtrend, I only trade pullback. And if the market make a retracement, I take a sell trade. So this is one of the examples of what I'm talking about. Because if you are thinking of the best strategy, you are going to think and you get tired of thinking, because the market doesn't care about your strategy. The market is just moving like a moving train. So what you have to do is to make use of what you have to gain what you want. So you don't need to come to the chart and be stressing yourself that you are looking for the best strategy. To be sincere with you, there is no best strategy. All you have to do is to follow the market wherever the market is going. That is how trading is done. So if the market is going down, you focus on down. You only sell when there's a pullback. That pullback becomes your edge. So you don't care if the market will reverse. You know fully well that the forex market is unpredictable. Anything can happen. So that is why your stop loss is needed. So in this scenario, you are going to be risking a small percentage of your trading account, and you are trading in the direction of the trend. So in this scenario, you need to have a good risk reward ratio. For instance, 1:4 or 1:3 and above, in the sense that you are risking $1 to make $3 or $4, or you are risking $1 to make $5, or you are risking $10 to make $50 or $40. So that's what we call a good risk reward ratio. So in this scenario, even if you lose 5 times, you have only one trade to recover your losses. So if your one trade is achieved, you will be able to recover your 5 losses. So with this scenario, it doesn't matter how many times you lose, as long as you have some winning trade. One win can recover 5 losses. So another example here is by using the moving average. Let me give you an example with the live market. Okay, this is the moving average. This blue line is the moving average, right? Now, as a random trader, you are only trading in the direction of the trend. In other words, you are just trading whenever the market is going. Wherever the market is going, that is the direction you are going, right? That means you are trading in the direction of the trend. So you don't need to come here and be trying to analyze this, stressing yourself. Before you know it, you just become confused. So if you want to become profitable as a newbie, don't overstress yourself that you want the best trading strategy. Just follow the market dynamic. Just follow the market wherever the market is going. So now, if the prices are above the moving average, then you know that the market is in an uptrend. You are only buying when there is a pullback. So when you have this mindset within you, you will lose, you will win. But as long as you have a good risk reward ratio and you are risking small amount of money, there is absolutely no way you will not come out profitable, because you are trading in the direction of the trend. That is why they say the trend is your friend. So if you watch clearly, you see that whenever price crosses below the moving average, you take a sell trade, right? So this strategy is for newbie day traders or scalpers. So you take your trade and take your profit as fast as possible, because during the day there is minimum movement of the market. So the little trend that you see, you take it. That is how you build your wealth, because they say slow and steady is the best. So the little you get, you keep accumulating it. Before you know, you have enough. So whenever there is a crossover, when the price crosses below the 30 exponential moving average, then you take a sell trade. So this blue line is the moving average. So what this blue line is doing, it is telling you the direction where the market is going. So whenever the prices are above this blue line, it means the market is in an uptrend at that moment. And whenever the prices is below this blue line, this 30 EMA, it means the market is in a downtrend at that moment. So as a random trader, you are only buying when the prices are above the moving average, and you are only selling when the prices are below the moving average. So that is it. You sell when the price is below the moving average, you buy when the price is above the moving average. So you don't care about anything, you just take your trade in that scenario. But what will help you is your money management and your risk reward ratio. Let me give you an example. Let me expand this a little so that you understand what I'm talking about. So now, for the fact you are trading based on this crossover, you have to watch to see a crossover for you to take a trade. So now you can clearly see that a crossover happened here. There's a crossover here, so the price has eventually crossed above this blue line. So what you do is you simply take a buy trade here. You take a buy trade here, right? And then you target 1 to 3 or 1 to 4 risk reward ratio. So if you are risking 10 pips as your stop loss, your take profit should be 30 pips or 40 pips. So that's what I mean by risk reward ratio, which means that if you risk $10, you should be aiming to make $30 or $40. So that way it will help you. Even if you don't have a good win rate, you'll still be profitable at the end of the day. So if you take your buy trade here, then your stop loss should be somewhere below this place. Somewhere here should be your stop loss, right? Then you can target here as your take profit. Just you make sure you do the calculation. Once your stop loss is 10 pips, your take profit should be 30 pips or 40 pips. So you do the calculation and that is it. So you see, if the price goes against you and hit your stop loss, let's say sometimes gold normally does that, like gold have long tail all the time. It can go down and hit your stop loss and then continue going up. What you have to do is to wait for the price to make a pullback again to this moving average, this blue line. Then you cannot take another trade, which is still buy trade. As long as the price is still above the moving average, you are still buying. So if you take a buy trade here and let's say your stop loss is very tight, maybe let's say your stop loss is somewhere here, and you took a buy trade because of this crossover and the price now went down and hit your stop loss, which means you have lost just 1%. What you have to do is you have to stay patient and wait for the price to come back to this 30 EMA, this blue line, and once the price comes back again, you take another buy trade. You take another buy trade and the stop loss will be here, and then your take profit as usual will be 1 to 4 or 1 to 5 risk reward ratio. So this is it, and then the price rallies up and then smash your take profit. Then you have made profit. Now you wait again for the price to make a pullback to this 30 EMA. Now you can clearly see that the price has made a pullback to this 30 EMA. So how you do this is you have to plan it. As a day trader, you have to plan it. So you have to know the time frame that you want to be using. Like in this tutorial, we are using the 15-minute time frame, which is the best time frame for day traders. So as long as you're using the 15-minute time frame, it is wise for you to be checking the chart every 15 minutes so as to be able to get an opportunity, because each candle expires within 15 minutes. So if you are monitoring the chart every 15 minutes, you'll be able to know, in fact, you'll be able to catch a crossover. If you are monitoring the chart every 15 minutes, you'll be able to catch a crossover. So in this scenario, you are waiting for the price to make a pullback or touch this 30 EMA for you to take a buy trade, but unfortunately the price broke below it. So for the fact that the price broke below it, it means that the trend have changed from an uptrend to a downtrend. So you are now looking to sell. So you wait for this red candle to close, then you place your sell trade here at the close of this red candle, and then your stop loss will be above it. Then you can still target 1 to 4 or 1 to 5 risk reward ratio somewhere here as your take profit, and that is it. As the market goes, it smash your take profit, then you are waiting for the price to make a pullback again to this 30 EMA for you to take your sell trade. So now the price came back again to this 30 EMA, and what happened, you took another sell trade here as the price tested the 30 EMA, you took another sell trade here, then your stop loss will be somewhere here. The stop loss will be somewhere here, and then your take profit as usual 1 to 3 or 1 to 4 risk reward ratio. Do you see how it works? So with this scenario, you don't have the time to come and be analyzing the market or trying to see, you are looking for this or that supply, demand, or all those things that you know they are too technical and it's affecting your brain. Why not follow the simplest formula? Just trade in the direction of the trend as a newbie trader. So now you can clearly see that the price has smashed your take profit, and that is it. You have made money. And sometimes the price can go up. Let's say as the price got to the moving average again, and you take a sell trade and the price now goes up and hit your stop loss, you accept your loss because the price cannot go in your direction all the time. So what you are doing is you are trading in the direction of the trend, and you don't have any bias or any fear that will tell you not to take a trade, because you have not developed a formula that you trade only in the direction of the trend, and you have something that helps you to know the direction that you want to trade. So if the prices are above the moving average, then you know that the market is currently in an uptrend and you are only meant to buy. So what you do, you wait for the price to make a pullback to the moving average for you to take a buy trade, and that is how you're going to be trading it until there's a change of trend. What do I mean by change of trend? Until the price now crosses below the moving average, which signals a change of trend. So it means an uptrend has ended and a new downtrend has begun. So you start selling. So you sell and wait for the price to make a pullback, a retracement to the moving average, and you take another sell trade again. This is the simplest way of trading. I've backtested this, and honestly speaking, I don't even know how to say it. This is the simplest way of trading. If you don't want all those stressful fundamental analysis, technical analysis, just follow this method. What you need is a good money management. Like I said, use 0.5% of your capital, not up to 1%, 0.5% of your capital. Let's say if you have $10,000 in your trading account, don't risk $100 per trade. Instead, risk $50 per trade. And if you have $1,000 in your trading account, don't risk $10 per trade. Instead, risk $5 per trade, which means that it's going to take you 200 times, not 100 times. It's going to take you 200 times before you can blow your account. So when you have the confidence that it's going to take you 200 times, it will give you the mind of trading with peace, with tranquility. So there is no rush, nothing will stress you. All you need is to just follow this style. Just follow the style and you are good to go. So if you watch, you see that even if you lose 5 times, one trade will recover your losses. Even if you lose 4 times, one trade will recover your losses. So imagine you open 10 trades, and out of those 10 trades, you lost 7 trades and you won 3 trades. So you do the calculation. 1 times 7 is what? $7. So you lost $7. Now 5 times 3 is 15. That means you won $15 and you lost $7. You are still profitable. But when you check, you see that you have a low win rate because you lost 7 times and you won only 3 times. But because of your risk reward ratio, because you only close your winning at 3% and you close your losses at 1%. So if you calculate it, you see that 1 times 7 is $7, but 5 times 3 is $15. So this is how it is. So now you've lost $7 and you won $15. You are still profitable. You are still profitable with $8. So with this, you can clearly see that even though I'm losing, I'm still profitable. So that is why I lose, I win, I lose, I win, but at the end of the month, I'm still profitable. So this is the secret that I want to share with you in this video. This is what so many traders are using to make money consistently in the forex market without stressing themselves looking for the best trading strategy. So my advice for you guys is to go and backtest this strategy, and if it is working for you, then you can implement it in your live trading account. So that is all I have for you in today's video. I will see you in my next update. Enjoy the rest of your day.